Ladies and gentlemen, welcome to our annual report. Amazon was founded in July 1994 in the United States by Jeffrey Bezos. The company immediately became well known among readers thanks to its extensive inventory and easy online purchasing process. We introduced music and films in the following years until creating the first stock market in 1997. And lately, we created the Amazon Web Service in 2002. During these 30 years, we have managed to become one of the most valuable corporations globally in every sector in which we operate, and to bring Amazon into every house, from the US to Japan. For example, with 11 global marketplace, 101 fulfillment customers, 180 buying customers from different countries, and 30 listing categories globally. Amazon has a diversified business model. As you can see, we divided in 4 different points. The first one is the value model, in which our mission is to serve customers through online and physical stores and focus on selection, price, and convenience. The second point is about the distribution models, in which our growth is built on our strong brand developed over the years. The third point is the financial model, in which we generate cash flows thanks to positive cash conversion cycles through suppliers and third-party stores, giving short-term liquidity. The last point is about the technological model with e-commerce marketplace and two-side network effect. Before talking about the financial part of this annual report, we will analyze the earnings of each asset from 2015 to today, and we will understand the reason of our transaction. We consider Amazon revenue streams from 2015 to 2022, and as you can see, the growth of each individual assets has remained constant over the years. Analyzing the situation of physical stores more specifically, we can see the enormous difference between the revenue of 2018 and that of 2019 and 2020 due to COVID-19. And, as in the post-pandemic years, there is an increase in revenues, but not as exponential as that of 2018. We are still facing continuous growth, which led to last year's exceeding 2018 in revenue. But it will be one of our objectives to fully recover from these situations and to bring our stores all over the world.
Hello everyone, thanks for joining me today. I'm really excited to dive into Amazon's balance sheet with you all. You know, it's kind of like taking a peek under the hood of a giant machine, and trust me, it's pretty fascinating considering the size of Amazon and everything it offers. So let's first start with the asset side. So think of assets as all the cool stuff that Amazon has. So first up, of course, we've got cash, which is around $29 billion. So not just lying around, but carefully managed to keep things running smoothly and to jump onto any cool opportunities that come our way. Of course, we also need the liquidity in case we need to pay out any debts. So then we have marketable securities, which sit at around $13.4 billion. So these are like our little side investments, making sure we're not putting all our eggs in one basket. And of course, we can't forget about inventory, which is a whopping $62.3 billion. This is all the stuff that we're ready to ship out to customers at a moment's notice. So let's move over to the liabilities and equity side. This is basically how we funded all our cool stuff, how we're keeping the balance, and how we're making sure that every customer gets what he wants. So our current liabilities like accounts payable and accrued expenses add up to quite a bit because, well, running something as massive as Amazon involves a lot of moving parts, partnerships, and of course, financing and debts in order to keep everything running. So now the long-term stuff like lease liabilities and debt might sound a bit daunting, of course, at $77.3 and $58.3 billion respectively, but it's all part of our strategy to keep growing and innovating. And hey, it's worked out pretty well for us so far. So what's really cool though is the stockholders' equity part. So this is where you come in. It's essentially the bet everyone's making on us, and we're working our tails off to make sure it pays off. So you might be thinking, why am I telling you all this? because Amazon isn't just a company. It's a massive ecosystem that's always evolving. And being a part of this journey, even as an investor, is like being in the front seat of one of the most thrilling rides of the 21st century. And as you know, we got big plans, and with your support, we're not just aiming for the stars. We're planning to build a whole new universe of possibilities of what the customer experience can be for a person shopping online. So, what do you say? Are you ready to join us on our of this?
Hey everyone, I'm thrilled to walk you through Amazon's financial journey over the past year. As captured in our income statement for January 1st to December 31st, 2024, it's been quite a ride and there is a lot to unpack. So let's dive in. Starting with the revenue side of things, our sales have been pretty solid. We brought in 41.8 billion from sales revenue and another 14 billion from service revenue. And hey, we even made a little extra, 50 million to be precise, from selling some assets. All in all, that brings our total revenue up to a cool 55.85 billion. Not too shabby, right? But as we all know it takes money to make money. So let's talk about where some of that revenue went. Our operating expenses were a mixed bag of necessary outlays to keep the Amazon machine well oiled and running smoothly. We invested 1 billion in marketing because, let's face it, we've got to keep reminding the world why Amazon is their go-to for pretty much everything. Research and development, or R&D as we call it, saw us spending 2 billion because innovation is our middle name. We're always looking for the next big thing that'll make your life easier and their services better. Our backbone is our employees, so employee benefits and bonuses were also on the list, costing us 600 million and 800 million respectively. We've been leaving rewarding hard work that keeps this giant ship sailing smoothly. Interest expenses were at 500 million. Borrowing money is a big part of growing big. But we're keeping an eye on keeping this as low as possible. We also had some other costs like charitable contributions at 100 million. Giving back is part of our ethos. Utilities, 250 million. Gotta keep the lights on and servers running. And insurance at 400 million. Better safe than sorry. Then there were the legal settlements at 300 million. Sometimes things get a bit complicated, but we always find a way through. And of course, depreciation expenses hit us with 10 billion because all those gadgets and buildings we use don't stay new forever. Lastly, we had to account for bad debt expenses at 200 million. Despite our best efforts, not all sales turn into cash in the bank. So, there you have it. It's been a year of big numbers, strategic spending, and solid growth. We're not just about making money, we're about making smart decisions that fuel our growth, innovation, and commitment to our customers and the planet. Thanks for listening, and we're excited about what the future holds, and hope you are too. Let's keep this conversation going and turn these numbers into even bigger successes together.
Hello everyone, today I'll be describing the trial balance. First we'll take a short overview of it and then we'll dive right into detail. The trial balance is a bookkeeping worksheet where the balances of all ledgers are compiled into debit and credit account columns, totaling some equal number. The fundamental purpose is to check the mathematical accuracy of the books by ensuring the total debits equal total credits. The components are account names, aka lists of all the account titles from the ledgers. Debit columns shows the total debit for each account. Credit columns displays the total credit for each account. The preparation timing periodically happens at the end of the counting period, closing to the process of the financial statement. The trial balance is also used as a review tool by accountants to ensure that the accounts are balanced and to identify any discrepancies for further investigation. I'm so glad you can join us today. I'm here to share a bit of our journey through the financial landscape of the past year, ending December 31st, 2024, and it's been quite a ride. I think you'll find some interesting bits in our story. First off, let's start with cash. We've got a solid 44 billion euros in cash, the bank, which is pretty awesome. It means we're doing a great job of keeping things flowing smoothly, paying the bills, and grabbing opportunities as they come. Now on to accounts receivable, sitting at a pretty 56 billion euros. This number isn't budgeted because it's all the trust we have in our consumers and the steady inflow we expect from them. It's a big thumbs up for us and our team's work in keeping these relationships strong. We've also got little tweaks in the allowance for uncollected accounts, just a minor 200 million. It's our way of keeping things real, talking about making sure not overestimating what's coming in. Inventory is next, starting at 30 million euros, but with a small adjustment, just down by 1 million. It's all about staying sharp, adapting to how things change in the market, making sure we're always on the point with we are having stock. Prepaid rent is holding at a steady 1 billion, which is our way of making sure we're always one step ahead, keeping our operations running without any mishaps. And our property, plant, equipment, it's at 15 billion, a solid foundation for all the cool stuff we have planned to do. Then there's the accumulated depreciation, a minus of 10 billion, reminding us that everything ages, even our gear. But it's all good. That's a part of the journey, and it shows we're putting everything we have to good use. Don't forget about equity securities and goodwill, each at 500 million. These might seem small, but they're mighty, representing the smart moves and partnerships we've been building. So ramping up our adjusted trial balance is more than just numbers. It's the story of where we've been, what we're adjusting, and what we're going to do in the future. It's about being smart, being real, being ready for what's next. We're excited about the future and hope you are too. Thanks for believing in what we do and for whom we do it for. Let's make some amazing things happen together. Thank you.
So, in conclusion, let's wrap up our discussion. It's been quite a journey peeling back the layers of our financial narrative for the fiscal year ending December 31st, 2024. So, from our solid cash reserves that reflect our operational efficiency and liquidity to the strategic adjustments in accounts to a present and realistic and transparent financial picture, we've covered, frankly, a lot of ground. Our journey through accounts receivable, inventory adjustments, and the significance of prepaid rent highlighted our market trust, adaptive inventory management, and foresight in operational planning. So, the tale of our property, plant, and equipment, along with the acknowledgement of accumulated depreciation, this all painted a picture of our foundational strength and realistic approach to asset valuation. Equity securities and goodwill offered a glimpse into our strategic investments and the intangible value that we have cultivated over the years, showcasing our broader vision beyond the immediate financial figures. So, let's talk in a less formal tone. We delved into the essence of our financial journey, transforming numbers and accounts into a narrative of growth, resilience, and strategic foresight. We discussed the importance of liquidity, the balance between optimism and realism in financial reporting, and of course, the significance of strategic investments and operational stability. So, to all our esteemed friends and potential investors, this journey through our financials is not just a tale of numbers. It's a mosaic of strategic decisions, operational efficiencies, and our unwavering commitment to growth and transparency. It's about being real, it's about being smart, and it's about being ready for the future. So, all this said, we're excited about the opportunities that lie ahead and invite you to join us in this ongoing journey of growth and innovation. Thank you for your belief in our vision, and let's make the future awesome together.